First of all, look at all the stuff that is collapsing, starting with all the macroeconomic data that is abysmal. And I'm going to get into some of that in a little bit. And consumer confidence, which has collapsed to an all-time record low, savings that have collapsed to near record lows, GDP forecasts that keep ratcheting lower, and personal wealth that is evaporating. Look what's happened to the stock market. We are now in a bear market in the S&P. We had a collapse in cryptocurrencies. A lot of wealth has evaporated, and maybe the Fed doesn't remember. The goal of quantitative easing was to create economic growth through a wealth effect. The idea was if the Fed could make asset prices go up, well, people would be wealthier and they would spend more. Well, it must work in reverse. If asset prices are collapsing and people are less wealthy, doesn't it stand to reason that they're going to spend?
Peter Schiff has warned everyone that the Fed will seize all their money really soon. But wait, how can it creep into people's bank accounts and steal their money? Well, when there is a crisis and no one knows what to do, government institutions can become the thief. Some of the worst things can be done in the name of the state to avoid market crashes. But how will the Fed steal your money? What should you do to keep your money safe? Watch this video where Peter Schiff tells how the Fed is planning to seize your money if you hold any in your bank accounts, or even in your pocket. That's the last warning you should take seriously. Let's get started. What's the reason why the US economy is sinking like this? Why is the Fed raising interest rates? And why is inflation breaking all records? The answer lies in the Fed's financial and monetary policies for the past years. Economics says that you have to balance the interest rate and inflation rate so that the market is neither resistive nor sedative. However, the Fed has forgotten this rule. Peter Schiff, the founder and CEO of Euro-Pacific Capital Incorporation, analyst, chief economist, author and market commentator, warned everyone about the upcoming crisis and the losses people have to bear. He said that earlier, when the inflation rate was at 2%, the Fed had achieved an interest rate that balanced this. In other words, the interest rate was also kept at 2% so people could take loans and spend in the 2% inflation environment. This could keep the economy on its track and ensure growth as well. However, with time, inflation increased massively. But the Fed stopped increasing the interest rates as it should have. With time, a gap was being created between inflation and interest rate increase, brewing a crisis for the future. And today, the time has come when that crisis will manifest itself. Today, as Peter Schiff said, inflation is at 8.6%. However, the interest rate is still lagging behind. And what happens when that's the case? Well, it's when a person spends more than he can earn. Inflation forces him to pay more prices for the same products. But they don't have that much money. So what do? They go to take loans and use credit cards that offer them money at lower interest rates than the inflation rate increase. Since they think getting loans are easy, they get more loans and keep spending money on inflated products. On the one hand, they spend more money, which goes into the Fed's pocket. On the other hand, they take more loans and get indebted to the loans for which they have to pay interest rates indirectly to the Fed. Here's a little reminder to like the video if you are loving it. And if you don't want to miss videos about the evolving economics and the financial order, subscribe to our channel. Let's continue now. Today, the inflation rate is at 8.6%. However, the interest rate is way behind, getting to 8% to neutralize. But why is the Fed not increasing the interest rates as much as it should? Well, you need to understand this to know how the Fed is stealing your money. Imagine that the interest rate has reached 8%. At this point, people won't take loans because it will be expensive to repay them. Furthermore, high inflation will also limit them from spending money on things they don't need. Rather, they will only spend money on things they need, like food, health, and energy. But the Fed doesn't want that. It wants you to have more loans to spend money on things that aren't your needs. That's why people take loans and buy from brands and bigger companies instead of caring about food and necessities. Since it's easy to get loans, people go to have more loans that drive the economy. However, this is wrong. In this case, people become the losing party while the Fed fills its pockets. Listen to what Peter Schiff said about that.
Neutral in the past when inflation was under 2% is not neutral in the present when it's over 8%, because neutrality is supposed to be an interest rate that is neither stimulative to the economy nor sedative to the economy. It's supposed to have no effect. Well, clearly, an interest rate in a 2% inflation environment is going to have a very different effect if you have the same interest rate in an 8% inflation environment. And so clearly, if 2% was neutral in the past, At a minimum, 8% would be neutral now, and we're not going to get anywhere near 8%, and so the Fed is not going to get anywhere near neutral. And if it's not even going to get neutral, let alone restrictive, what hope does it have of actually solving the inflation problem and returning the annual rate back down to 2%? If the Fed really was determined to make sure it eradicated inflation for good, it wouldn't be talking about any victory claims simply because inflation was headed down. They want to make sure that it is down and that it stays down. So what Powell should have said is, we will not back off until not only inflation has returned to 2%, but that it stayed at 2% long enough so that we're convinced that it's going to stay down there and not go right back up. Because what happens if inflation's 8.5% and then it goes down to 5 or 4% and the Fed is, okay, great, it's going to go to 2, and it never hits 2. And the next thing you know, it goes up to 10. The Fed can't take any chances. But I think the Fed is already setting the markets up for a premature victory claim, because I think the Fed knows it can't actually beat inflation, but it's hoping that maybe it can fool the markets into thinking that it beat it, and it can pretend that it beat it by declaring victory, even though a victory hadn't been won. You just got this inflation. It's not like it's been here for a long time, and so easy come, easy go. It just came around, and now we're going to get rid of it, and the public doesn't expect it to continue because it's so new, and all of that is simply not true. And again, we have had inflation for a long time. It's just that the public wasn't complaining about it for a long time because it wasn't this extreme, but we still had it. And of course, when inflation was predominantly in financial assets, nobody complained. And of course, in the early days of this inflation, if you go back to 2008, 9, 10, the Fed created a lot of inflation, but what that did was prevent prices from falling, not really pushing prices up. If it wasn't for QE1 and QE2, the Great Recession would have been much greater, and we actually would have seen a healthy decline in the cost of living, in consumer prices. Why didn't that happen? Well, because the Federal Reserve printed all this money. So yes, there's an inflation problem in Europe. Yes, there's an inflation problem in Japan. There's inflation problems all around the world because central banks all around the world made the same mistakes as the Federal Reserve. In fact, the Federal Reserve may have been the leader, and all the other central banks were following in their misguided footsteps. There's signs everywhere that consumers are tightening their...
But has it made any difference? Has the Fed been successful so far? Well, Peter Schiff said that the Fed's policy of increasing interest rates gradually has not worked. It's a total failure, but Fed Chairman Jerome Powell doesn't confess. He is increasing interest rates, however, incrementally. In other words, he is increasing interest rates step by step, which isn't making any difference at all. You should understand that interest rates are increased to influence consumer behaviors, so they spend less. However, the gradual interest rate increase has done nothing. Peter Schiff isn't saying that the interest rates shouldn't be increased. Rather, he is asking to increase the interest rates as much as they should be. Interest rates would be equal to or more than the inflation rate, and that's how the policy will make a difference. That's when the U.S. economy will start to come back on track, and the apprehension of a crisis will start to ease. But the Fed doesn't want to do it. It wants to suck as much money as possible from people by making loans easier and increasing inflation. Imagine when you were given easier loans. Wouldn't you spend money even if inflation is high? That's what is happening now, and the Fed is the party that is playing these dirty games. Now imagine what if getting loans becomes difficult. Will you spend money on expensive products? Well, the answer is no. However, the Fed doesn't want that. It wants you to make a mistake and spend more on inflated products by taking loans. Listen to what Peter Schiff said.
First of all, look at all the stuff that is collapsing, starting with all the macroeconomic data that is abysmal, and I'm going to get into some of that in a little bit, and consumer confidence, which has collapsed to an all-time record low, savings that have collapsed to near record lows, GDP forecasts that keep ratcheting lower, and personal wealth that is evaporating. Look what's happened to the stock market. We are now in a bear market in the S&P. We had a collapse in cryptocurrencies. A lot of wealth has evaporated, and maybe the Fed doesn't remember. The goal of quantitative easing was to create economic growth through a wealth effect. The idea was if the Fed could make asset prices go up, well, people would be wealthier and they would spend more. Well, it must work in reverse. If asset prices are collapsing and people are less wealthy, doesn't it stand to reason that they're going to spend less? But not only are some aspects of personal finance collapsing, other aspects are surging, like the cost of food. The cost of energy, the cost of shelter. What about interest rates, which just got ratcheted up again? In fact, home mortgage rates now are at 6.25%. They continue to go up. Credit card debt is at an all-time record high as credit card interest is surging. So consumers have seen their wealth wiped out at the same time their cost of living is going up. How could you say there's no evidence that consumers are going to be impacted by any of that and that they're not going to adjust their spending in consideration for what has just happened to their wealth and their cost of living? But Powell claims, no, there is no signs anywhere. There's no indication that anything bad is happening to the consumer and the consumer is going to change his habits at all based on what's happened. So number one, that is a lie. I mean, why even tell that lie? Why not just admit the obvious, especially since, and here is the bigger problem, the very goal of raising interest rates to fight inflation is to influence consumer behavior. You're trying to stop consumers from spending. You're trying to encourage them to save. You're trying to diminish demand along with supply so that prices would come down. So the very reason that Powell is raising rates is to influence consumer behavior. Yet Powell is claiming that there's absolutely no signs that any of the rate hikes have done anything to influence consumer behavior, that they're behaving exactly the same now as they were before rates were increased, which is an admission that the entire policy is a failure, because he's not going to reduce inflation unless he reduces demand, and he's not going to do that unless he changes consumer behavior, and he claimed that he's doing no such thing. He said the economy is in great shape. He said there were no signs of a broader slowdown, which also means there's no signs that inflation is going to slow down either. Double-digit core year-over-year inflation in producer prices. That is a hot number. And again, all this shows is consumer prices have more room to increase because the producers are yet to pass on the full extent of their rising costs to their customers. Those price hikes are already baked into the cake, and pretty soon the customers are going to be eating it. In fact, it's going to be rubbed all over their faces, and this is more bad news for the Fed and the economy. But we got more bad news on the economy itself. And of course, nobody thinks a recession is anywhere in sight. I mean, maybe some people think that we might get a recession in 2023, but pretty much nobody believes that we're already in recession other than me. We've been in a recession since the beginning of Q1. And if we're already in a recession, imagine how much worse that recession is going to get as the Fed continues to raise interest rates, as rising prices continue to exact a toll on the consumer, who now has to deal with the reverse wealth effect of watching their stock portfolios and their crypto portfolios crash.
When prices of goods and services keep on increasing, while your income doesn't rise at the same speed, you actually lose your money. You don't notice that the Fed is stealing your money, but when you pay more, you transfer your money to Fed's pocket without any objections. Since the Fed increases inflation, it becomes the only thief who gets to decide what amount of money it wants to steal. And the people become one of their kind of robbed party who themselves offer their money. Isn't it interesting that people offer their money to the Fed on their own will? What do you think? For how long can the Fed fool people? No matter who you are and what you do, you have to allow the Fed to seize your money. You have only one option, which is to produce all your products and not buy them from the market. Comment right below in the comment section. Do you think the Fed can take control of the situation that is getting out of hand? Or do you think the Fed will keep pretending that it's doing a lot to bring inflation back to normal? Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to our channel for more videos on the latest economics and financial news. Until the next video, stay tuned.